It seems to be more about capital preservation here right now at a time when it's hard to find places to hide. How are you reading into this?
Yeah, I do agree with Mark's perspective. In a sense, also in the FX market, I think nobody really wants to stand in front of dollar strength, given how hawkish the Fed is. And very similar to the perspective from Mark is that we know the Fed is going tough, at least for the next 2 to 3 meetings, May, June, fully priced in for 50. The language is actually not going to soften until they get to a point somewhere in Q3 that after, say, 2 to 3 steps of 50, you get inflation finally easing into the second half. You get a bit of growth decelerating as well. Then we can perhaps talk about an inflection point in the US dollar when the Fed softens the hawkish message and the attention then turns into Europe being a better place, tensions being on the subsiding trend. So I think it is still a year of 2 halves. In the next 3 months, we will still be looking for more dollar strength. But this safe haven demand for the dollar is likely to actually ebb gradually into the second half and into the later part of this year.
And of course, this week really has been that breakout in dollar China that everyone seems to be worried about. I know we're seeing a bit of stabilization here today, Teck. I have to wonder, though, what gauges, what indicators do you look at to ensure that this yuan depreciation that we have been seeing isn't spiraling out of control?
Yeah, I think the most important concern from the markets is that, is this an active devaluation by the officials, or is this simply a reset of the exchange rate given how dire the economic situation is in China? The key question is that as long as it is not Chinese officials actively pursuing currency weakness in an attempt to boost exports or boost growth, traders or the markets in general will be quite relaxed about the magnitude of the Chinese yuan depreciation. And I think of comfort is earlier this week when we saw that the PBOC lean against the weakness or the speed of the weakness of the Chinese yuan by lowering the foreign FX reserves to release a bit of the dollar liquidity back into the market. So that is actually a sign that they are not intending to weaken the currency. It is probably just weakening for fair reasons, and it would be quite moderate.
That's right, and above all else, China wants a stable currency. There are limits to yuan weakness. What's fair value for the yuan?
Well, I think it is pretty fair already. Just from a bigger perspective, current account is in the low single digit, and they have transitioned from a dollar peg regime to a trade weighted regime since 2015. They are not overly controlling the currency because their fixing pattern seems to be in line with what the market is expecting based on trade weighted movement. So I think the answer to that question is that it is actually pretty fairly valued. Now, obviously, the fair value changes alongside economic dynamics. And on that note, I think the downside risk is that if they were to prolong the lockdown into the second half of the year, then you have to talk about further weakness and a lower fair value. So I think as long as our base case remains that the dynamic COVID-0 policy will not be too harsh, we can expect the Q2 to be maybe the trough in China's growth and a better second half. And the dollar CNY should actually stabilize about 6.5, 6.6.
Teck, talk to us about your conviction calls versus the yuan liking the Sing dollar.
Yeah, so I think one way to express the expensiveness of the Chinese yuan, given how much it has already done over the past 2 years, be it a consequence of the yield advantage, which is now pretty much evaporated, is that there is some weakness that is very justified from the Chinese yuan on a trade-weighted perspective. One way to very cleanly position for trade-weighted Chinese yuan weakness is versus the Sing. Because the Sing dollar is a trade-weighted basket, essentially. So if you were to be long Sing and short Chinese yuan, you do capture a fair bit of pure Chinese yuan trade-weighted weakness. And on the other side of the trade, of course, Sing dollar, we know MAS is keeping a strengthening currency policy given of the local dynamics is a bit different. So this is a trade that we do like within the Asia space.